I turn first to our decisions on tax. I have tried to be fair by following two broad principles. Firstly, we ask those with more to contribute more. And secondly, we avoid the tax rises that damage growth. Although my decisions today do lead to a substantial tax increase, we have not raised headline rates of taxation, and tax as a percentage of GDP will increase by just 1% over the next 5 years. I start with personal taxes. Asking more from those who have more means that the first difficult decision I take on tax is to reduce the threshold at which the 45p rate becomes payable from £150,000 to £125,140. Those earning £150,000 or more will pay just over £1,200 more in tax every year. We're also taking difficult decisions on tax-free allowances. I'm maintaining at current levels the income tax personal allowance, higher rate threshold, main national insurance thresholds and the inheritance tax thresholds for a further 2 years, taking us to April 2028. Even after that, we'll still have the most generous set of tax-free allowances of any G7 country. I'm also reforming allowances on unearned income. The dividend allowance will be cut from £2,000 to £1,000 next year and then to £500 from April 24. The annual exempt amount for capital gains tax will be cut from £12,300 to £6,000 next year and then £3,000 from April 24. These changes still leave us with more generous allowances than countries like Germany, Ireland, France and Canada. Because the OBR forecast half of all new vehicles will be electric by 2025, to make our motoring tax system fairer, I've decided that from then, electric vehicles will no longer be exempt from vehicle excise duty. Company car tax rates will remain lower for electric vehicles, and I've listened to industry bodies and will limit rate increases to 1 percentage point a year for 3 years from 2025. The OBR expects housing activity to slow over the next 2 years, so the stamp duty cuts announced in the mini-budget will remain in place, but only until the 31st of March 2025. After that, I will sunset the measure, creating an incentive to support the housing market and the jobs associated with it by boosting transaction during the period the economy most needs it. I now turn to business taxes. While I've decided to freeze the employer's NICS threshold until April 2028, we will retain the employment allowance at its new higher level of £5,000. This means 40% of all businesses will pay no NICS at all. The VAT threshold is already more than twice as high as the EU and OECD averages. I will maintain it at that level until March 26. My right honourable friend, the Prime Minister, successfully negotiated a landmark international tax deal to make sure multinational corporations, including big tech companies, pay the right tax in the countries they operate. I will implement these reforms, making sure the UK gets our fair share. Yeah. Alongside further measures to tackle tax avoidance and evasion, this will raise an additional £2.8 billion by 27-28. I've also heard concerning reports of abuse and fraud in R&D tax relief for SMEs, so I've decided today to cut the deduction rate for the SME scheme to 86% and the credit rate to 10%, but increase the rate of the separate R&D expenditure credit from 13% to 20%. Despite raising revenue, the OBR have confirmed that these measures have no detrimental impact on the level of R&D investment in the economy. Ahead of the next budget, we'll work with industry to understand what further support R&D-intensive SMEs may require. Next, windfall taxes. I have no objection to windfall taxes if they are genuinely about windfall profits caused by unexpected increases in energy prices. I know the honourable members opposite are getting excited at the talk of windfall taxes. Can I just say that any such tax should be temporary, not deter investment, and recognise the cyclical nature of energy businesses. So, taking account of this, I've decided that from January the 1st until March 28, we will increase the energy profits levy from 25 to 35%. The structure of our energy market also creates windfall profits for low-carbon electricity generation. So from January the 1st, we've decided to introduce a new temporary 45% levy on electricity generators. Together, these measures raise £14 billion next year. Finally, I turn to business rates. It's an important principle that bills should accurately reflect market values. So we'll proceed with the revaluation of business properties from April 23. But I will soften the blow on businesses with a nearly £14 billion tax cut over the next 5 years. Nearly 2/3 of properties will not pay a penny more next year, and thousands of pubs, restaurants and small high street shops will benefit. This will include a new government-funded transitional relief scheme, as called for by the CBI, the British Retail Consortium, the Federation of Small Businesses and others, benefiting around 700,000 businesses.